Hello and welcome to Healthcare Finance Unit 7. In this unit, we will be discussing finance analysis. The top 4 learning objectives for Unit 7 are: explain the purpose of financial statement analysis, describe the primary techniques used in financial statement analysis, conduct basic financial statement analysis to assess the financial condition of a business, and discuss the problems associated with financial statement analysis. Now remember, these are the top 4 learning objectives which we will focus on this week. Other learning objectives which you are responsible for understanding can be found within the classroom page. Explain the purpose of financial statement analysis. In previous units, we have learned about the role financial statements play in healthcare organizations. Now, we will discuss the analysis of those financial statements. Why is this important for a healthcare manager? Well, it all comes down to understanding where your organization or department currently stands financially and helps you to be able to forecast as well. It's important to understand, however, that data is only valuable when you have context for it, meaning you can analyze financial statements all day long, but without an understanding of the organization's daily operations, workflow, challenges, etc., that data is seemingly useless. As a healthcare manager, you are often closest to the work that influences the data collected by higher-ups in your organization. That is why your input and participation in the financial planning and budgeting process is so valued. Describe the primary techniques used in financial statement analysis. So, how do we analyze financial statements? There are 4 primary techniques, each with their own merits: ratio analysis, DuPont analysis, common size analysis, and percent change analysis. Let's look at ratio and DuPont analysis. Ratio analysis. There are quite a few ratios that can be used to evaluate an organization's financial condition. The commonality they all share is that their purpose is to translate raw data into easy to understand, actionable information. Even if you're just starting out in a managerial role, you can begin using basic ratios to evaluate your department's financial position. One of the beauties of ratios is that they can help managers express strengths and weaknesses, such as profitability or waste, to internal stakeholders who have the power to enact or support change. Next up is DuPont analysis. The equation for DuPont analysis is as follows. This type of analysis is beneficial because it breaks down several profitability factors. You will notice each of the elements contained in this equation is a ratio in and of itself. So you need to be comfortable and confident performing the individual ratio calculations before moving on to using DuPont analysis. Common size analysis. This type of analysis is beneficial if you're comparing financial statements of entities varying in size. For example, if you want to compare your small rural hospital's financial statements with a hospital in a metropolitan area, you could use common size analysis to remove the influence of scale. Percent change analysis. This type of analysis helps to illustrate changes in income statement and balance sheet items, with changes expressed as a percentage. Percent change analysis is beneficial if you're trying to analyze trends in growth or deficits over several accounting periods. Conduct basic financial statement analysis to assess the financial condition of a business. Although we will not perform calculations in this presentation, several instructional videos will be posted in the classroom for you to view. I encourage you to watch these and practice performing various ratio calculations on your own with fictional data. As we've discussed in previous units, technology aids in the majority of financial calculations for most healthcare organizations. It is, however, important that you understand the backside of this technology because you need to know what's happening to the data you may be supplying. Discuss the problems associated with financial statement analysis. Being able to analyze and interpret financial statements is a key skill for healthcare managers. Perhaps equally important is the ability to use critical thinking and exercise professional judgment when it comes to taking action with the results. Some of the potential issues to be aware of include comparison of data with other lines of business, whether that's internal or external. Determining if a value is good or bad. Let's take, for example, a new business, fresh off the ground. You should expect to be in the red to a certain degree, perhaps not reaching profitability for quite some time. It is unfair to compare your business with a competitor who has been operating for years and has an established patient or client base. Next, it's important to consider the fiscal period length of financial statements and reports. Some fiscal years begin in July, while others in January. Still others may operate with a standard fiscal year timetable, but conduct the majority of their business on a seasonal basis. Take, for instance, an urgent care clinic in Vail, Colorado. Patient volume will definitely be highest during ski season and take a dip during the off-season, perhaps. Therefore, you should be cognizant of making month-to-month comparisons for an entity that experiences seasonal fluctuations. Lastly, two influencing items that are for the most part beyond a manager's control: inflation and depreciation. To illustrate this point, assets values are reflective of historical cost, not current value. Equipment purchased by a clinic 20 years ago will be significantly understated in value, reporting a lower book value of fixed assets, and would therefore report a higher turnover ratio than, say, a new clinic. In addition, the old clinic would report higher profitability than the new clinic due to lower depreciation expenses. While these problems may seem heavy, it's important to remember financial statement analysis, just like anything in life, is all about balance and good judgment. Healthcare managers should use reliable resources and seek mentors to guide them through financial analysis. Regardless of your current career role, you may be able to begin participating in the financial aspect of your organization. All it takes is a conversation with your supervisor and you expressing a desire to learn a new side of the business. It's now time to dive in and further explore the topics covered in Unit 7. Remember to complete the following: watch supplemental videos, complete assigned and suggested readings, and review discussion and assignment instructions. This concludes the presentation content for Unit 7.